Hello from London. Nothing to complain about this week. Plenty of weekly key reversals at the end of last week, though it was a mixed collection. In the currencies we had quite a few, and what was interesting, they were not all the same way. The big one was a weekly key reversal down in Eurodollar. This was caused more by the second scenario that I'd mentioned last week and the week before that as well. Now, for those of you who may not remember, I laid out two possibilities for why there had been a recent dearth of weekly key reversals. The first scenario was one where a market was continuing its prior strong move, either higher or lower, and thus was not able or in a need to make a weekly key reversal. The second scenario was where we had 2 or more weeks of narrowing patterns, narrowing ranges I should say, that are crying out for a weekly key reversal or some similar such pattern to maybe stir the pot. Well, the second scenario is where Eurodollar lay. What is also interesting is that we've had no follow-on lower as yet to this weekly key reversal down. We also had a weekly key reversal down in Kiwi dollar against the US dollar, and a weekly key reversal up in US dollar against the Romanian leu and the US dollar against the Danish kroner as well. As you can see, that these were all facing the same way, looking for a stronger dollar. However, that does not explain why we had a weekly key reversal down in US dollar against the Mexican peso. You see, in this pairing there were, and still are, other factors at play, and one of the more important of these factors is how the rising short medium moving average, currently at 2077.56, is managing to hold up the market on a closing basis. You could argue that the 50% Fibonacci line for the whole of 2021 so far at 2084.56 may also have helped, but I wouldn't go along with that and view that 50% Fibonacci line more as a resistance than a support. Anyway, there has not been any follow-through lower in this pair, nor indeed the opposite, as has been the case for the other currency pairs detailed here as well, which is not that unexpected when dealing with things on a weekly scale. My apologies, I forgot to mention one other currency pair. It was US dollar against the Colombian peso. We had a weekly key reversal up last week. What was unusual here was not only the size of the weekly key reversal up, but also that we had a daily key reversal down on last Friday, the last day of last week. This may have tempered the bullish pressure, but as is obvious from the action this week, it has not extinguished nor acted as a full counter to the weekly bullishness that we've seen. Looking at the commodities next, and in the precious metals we had one weekly key reversal up and another attempted one that ended up in a lesser outside weak pattern. In spot gold we had a weekly key reversal up last week, though with limited action as a follow-on this week. In spot silver we had an attempted weekly key reversal up as well that ended up actually as a lesser outside week in the end. However, the market seems a little more keen in pursuing the bullish incentive in silver right now as compared to gold. The last of the metals is a base metal, and it is LME 3-month aluminium, where we had a weekly key reversal up last week. The initial response this week was negative. However, yesterday we had an immediate countering bullish opening long white Mariposa that punched up not only through the April 2018 high at 27.18, but also the interesting crossover of the rising medium moving average currently at 27.48 and a declining short medium moving average currently at 27.41, closing at a high not seen, well, since late October. Today we've moved even higher over the breached mid-February to early November uptrend, currently at 27.90, that was acting as a bump and run reversal top trend line, as well as the May 2011 high at 28.03. I think we can say now that there has been a follow-on higher to the prior week's weekly key reversal up. Finally, the last of the commodities. We had a weekly key reversal up in Chicago soybean futures. Indeed, this weekly key reversal up was the last in a series of patterns that happened late last week in this commodity. Now, key above all was the break up and over the combination of the upper downtrend trend line, currently 1281, of the October to date lopsided diamond pattern, as well as the flatlining medium moving average, currently 1276, both made also last Friday. We've since seen a move higher from this diamond pattern and the medium moving average towards resistance at 1333, 1343, and towards a slowly declining long moving average, currently at 1357. Now, for your guidance, target X for the move up and out of what looks like a diamond bottom is a little higher than the long moving average, and that's in the 1370 area. That's it for this week. However, I'm always happy to answer any questions with anyone who is interested, and with that I'll finish this section from London. And I hope you found these comments useful.